Hey everyone, and welcome to This Explainer. Today we're doing a deep dive right into the engine room of the hospitality industry. We are going to transform what often feels like absolute restaurant financial chaos into a highly structured, reliable recipe for success. Honestly, if you've ever looked at a restaurant's books and felt entirely lost, you're in exactly the right place.
So, I want to start off with a really simple question for you. What is the actual secret recipe to a restaurant's financial success? Because let's be honest, cooking phenomenal food and offering great service, that's really only half the battle. Without a solid, rock-steady financial framework running quietly in the background, even the most popular, packed restaurants can fail. The real secret literally lies in how you count, track, and manage the numbers.
Okay, let's dive into this. Think of today's agenda as our six-course educational meal. First up, choosing systems. 2, cash accounting. 3, accrual accounting. 4, comparing methods. 5, the best method for your size. And finally, when to change. All right, course 1, choosing accounting systems. Before we even get into the different methods out there, it's absolutely crucial to get one thing straight. There is literally no one-size-fits-all approach to restaurant bookkeeping. I mean, what works for a bustling coffee cart is going to completely break down for a massive multi-location steakhouse, right? So when you're setting up your foundation, you've got to look at the size and complexity of your operations, and obviously your available budget. But don't sleep on the human element. Ease of use and staff training are huge, because the system is really only as good as the people actually pushing the buttons. It also needs to play nice and integrate with your current point-of-sale systems. Above all, just remember that the foundation of a good system is scalability. It has to be able to grow right alongside your restaurant's future ambitions.
Moving right along to Section 2, cash accounting. This is all about simplicity and ease. If accounting methods were food, this one is absolutely your street food menu. It's fast, it's totally straightforward, and it is all about the cash in hand. Cash accounting is exactly what it sounds like. You only record revenue and expenses when cash physically changes hands. I kind of like to think of this as the wallet analogy. If the money isn't physically sitting in your wallet or, actually cleared in your bank account yet, as far as your books are concerned, it simply does not exist, period. So weighing the pros and cons here, the massive plus is that it's just incredibly simple to apply. You literally need almost zero advanced accounting knowledge to pull this off. Plus, it gives you a beautifully clear, real-time look at your actual cash flow. But there are some major drawbacks. It is notoriously terrible at tracking your inventory value, which is a massive deal in the food industry. And because it totally ignores unpaid bills or revenues you haven't collected yet, it completely fails to show you your true long-term financial health. Which brings us to Section 3, accrual accounting. This is where we get into comprehensiveness and accuracy. So if cash accounting is our street food, accrual is definitely the fine dining menu of the accounting world. It's multi-course, it's complex, and it requires careful tracking of absolutely every single ingredient. Accrual operates on a totally different philosophy. Here, you record revenue and expenses when they are actually earned or incurred, completely regardless of when the cash moves. Think of this as the pantry and upcoming bills analogy. You're not just staring at your wallet anymore. You're actively tracking the commitments you've made to pay your suppliers and the commitments your customers have made to pay you.
And actually, this brilliantly illustrates how it works in the real world. Let's look at this specific example straight from our source material. Imagine you take on a catering job worth 5,000 Saudi riyals. You deliver the food, you provide the service in December, but the client, as they often do, doesn't actually pay the invoice until January. Well, under accrual accounting, you record that 5,000 riyal revenue in December because that is when you actually earned it by doing the work. Under the cash method, remember, you wouldn't even record it until January. Looking at the overview here, the advantages of accrual are massive. It gives you a highly accurate representation of your financial health because it perfectly matches your revenues to the expenses you incurred to generate them in that same exact period. It's also fantastic for tracking inventory and your cost of goods sold. However, the limitations are very real. It comes with high complexity and a pretty heavy administrative burden. You need actual accounting expertise to run this. Plus, there's this really unique danger. Your profitability can look amazingly healthy on paper, while your actual bank account is literally sitting on zero. All right, Section 4, comparing accounting methods. Let's put these two head to head. Now, what's really interesting about this is that we're basically setting this up like a heavyweight boxing match. There's a fundamental, almost binary difference in how these two methods view time and value. In one corner, you've got cash accounting, living entirely in the present moment. It only cares about current cash movement. In the other corner, accrual accounting is all about the matching principle of earned value, so it's looking at the entire timeline of an obligation. To really hammer this home, just look at how they handle receivables and payables.
Cash accounting ignores them completely. Accrual tracks them fully. For inventory, cash tracking is super limited, whereas accrual is comprehensive and highly accurate. Ultimately, the cash method is really best suited for small cafes with simple day-to-day operations, while accrual is an absolute necessity if you're running large chains or multi-location empires. It shows exactly how accrual gives that full 360-degree view, while cash is strictly focused on your current bank balance.
Now, before we move on, I want to briefly layer your knowledge with two other terms from the source that restaurants use right alongside these systems. First, there's cost accounting, which is laser-focused on analyzing specific recipe costs so you can actually price your menu profitably. And then there's managerial accounting. This is all about internal data used strictly by management for things like budgeting, forecasting, and performance evaluation. You essentially build these vital tools right on top of your base accounting method.
Moving on to Section 5, Best Method for Your Size. This is where we really explore the entrepreneur's journey, because let's be real, a restaurant's growth directly dictates its financial needs. Let's move to the three main stages and see how this builds. We've got the small cafe with under 10 staff, the medium restaurant with 10 to 50 staff, and a large chain with over 50 staff. As you scale through these stages, you absolutely have to level up your systems. Take this specific scenario right out of the source material. Imagine a little spot called Delicious Coffee. It's a 20-seat cafe, it has 5 staff members, and it pulls in about 50,000 Saudi riyals in monthly revenue. Because their transactions are mostly simple, direct, and cash or credit card based, this cafe is the absolute perfect candidate for basic cash accounting. It keeps their admin costs super low and gives the owner exactly what they need to know right then and there: how much cash is actually in the register. But, what happens when Delicious Coffee grows into a bustling, medium-sized restaurant? Well, that's exactly where this middle ground solution comes in: modified cash accounting. This is a really clever hybrid approach. It lets you track long-term things like your inventory and fixed assets on an accrual basis, so you actually know your true food costs, but you get to keep your daily operational income and expenses on a simple cash basis. It's literally perfect for medium-sized operations that desperately need better inventory tracking but want to avoid total, overwhelming accounting complexity. However, once you hit that third tier, chain status, talking over 50 employees, multiple locations, massive complex inventories, the whole game changes. At this level, full accrual accounting and advanced ERP or enterprise resource planning systems become absolutely mandatory. You're no longer just tracking cash in a register. You're managing complex supply chains, and you have to comply with strict international accounting standards. Finally, Section 6, when to change your system. So, the crucial point here is that upgrading your financial framework is kind of like performing open-heart surgery on your business. It has to be done carefully so you don't completely disrupt your daily operations. The source provides a highly actionable checklist for this transition. First off, timing is everything. Try to align the switch with the start of your fiscal year and absolutely, positively execute the change during your off-peak quiet seasons. Do not do this during the holiday rush. Next, invest heavily in staff training. A fancy new system is completely useless if your team doesn't understand the methodology. And finally, prepare to recast your previous financial statements into the new format. If you don't, you literally won't be able to accurately compare your current performance to your past performance. Wow, okay, we have covered a tremendous amount of ground today in this explainer, from the simple street food style of cash accounting all the way to the multi-course complexity of accrual accounting. But I want to leave you with this final, really critical question to chew on. Look at your own operations. Is your current accounting system actually helping your restaurant grow, or is it holding it back? Are you using the right financial menu for your future ambitions? Definitely something to think about. Thanks so much for joining me today, and keep learning.